Welcome back. I'm Michael Bull, and this is the Commercial Real Estate Show. We have some great shows coming up for you. Next week we'll cover crowdfunding, and the week after that we'll look at mixed-use developments. Be sure to catch shows of special interest to you. Sign up for a once-a-week email announcing the show topic at commercialrealestateshow.com. Well, today we're discussing the hospitality industry. Welcome back Mark Woodworth with PKF Research, hospitality research firm. Also, please welcome David Marvin to the show. David is the founder and president of Legacy Property Group. With more than 100 years of combined real estate experience, Legacy Property Group has developed and managed innovative projects in senior housing, retail, residential, mixed use, and hospitality. David, thanks for joining us today.
Michael, it's a pleasure.
Well, we appreciate you being here, and we've heard that the hospitality industry is doing well, and you have full service hotels, limited service hotels. What are you seeing, and how is it different than maybe a year ago?
Well, I think the outlook is very strong. I'd echo the comments that Mark Woodworth made in the last segment. What we're seeing in our properties was strong growth in 2012, growth in 2013, and very favorable indications for 2014. So as demand has bounced back, it's driving revenue and bottom line because this cycle has really curtailed new supply, and so absolute number of rooms being sold is up, and that ultimately is driving rate, occupancy, and RevPAR.
That's good news. Well, what are some trends in the industry that might surprise some people, Mark?
Well, one that actually I'd like to get David's reaction to, because as you know, I sit behind my desk and play with numbers all day. He's in the real world making it happen. But if we think about different locations around the country, you know, resort, small town, highway, airport, etc., one category, and that's urban hotels, is now performing at record occupancy levels. It's never been this high before. Which in and of itself is surprising, but it's particularly surprising when one realizes that the one type of traveler that's yet to recover from the downturn is the group meeting attendee. And so you've got one of your core constituent groups that's not fully back, but yet we're at record occupancy levels. So I have some theories as to why that might be, but David, I'm just interested. What are you seeing in your urban properties and that customer mix and who's replacing the group? In fact, if that is what's happening, and you know, why is it?
Right. Well, it's a great question. We're seeing group is down, but they're being replaced, and we're opening inventory to leisure and to corporate travelers. And I think the real new news relates to leisure and the fact that many Americans and international travelers are seeking urban experiences for their vacations. In some instances, it's been budget driven. Have a staycation, not get on a plane, but drive to a local market. But I think that urban offerings now are becoming much more interesting to the vacationing public, to the leisure public. There's an aggregation of new attractions and cultural facilities. So the good news is it's counteracting and in fact eclipsing the decline in the other segment, the group segment, that's still waiting to recover.
When's group going to come back?
Well, from the survey work that we've done, it's coming back as we speak. Again, it's going to vary from market to market, but the lead times that meeting planners now realize they have to live with are beginning to slowly stretch out. So I think it portends a very interesting situation where you're at record occupancy levels, but now you're in the happy spot of saying, I'm going to replace these customers with what I would expect to be a higher priced or higher price paying consumer, which again is going to continue to drive that rate and drive profits.
Okay. So it's not all rosy out there. I'm sure there's some challenges in the industry. So what are the challenges you're having to overcome today, Dave?
Well, I think that the labor market is a great concern. I think just plain managing people and the numbers of people that come to the hospitality world that it requires to run a hotel makes it very labor intensive. And so rumblings of minimum wage increases, Obamacare concerns have direct impact on the hospitality industry. And we've wrung out an awful lot of the inefficiencies in the hotel management world over the last couple of years as we managed around the challenges of the recession. And so there isn't a lot more slack to give in other areas, and I'm afraid some of these labor headwinds are going to affect bottom line.
And if I could add to that, I mean, in a typical hotel, 46% of all expenses are labor and related costs. So it's by far the largest single category. And you're right, there's a lot of upward pressure now on what those numbers are actually going to be.
And is that maybe an increase in cost of 10% or 5%? How major is it? We'll find out when we get back. I'm Michael Bull. This is the Commercial Real Estate Show. We'll have more on the hospitality market when we get back. Thank you.
The Commercial Real Estate Show is brought to you in part by your friends at Bull Realty. When your business requires proven performance, visit bullrealty.com or call 800-408-BULL.
Welcome back. I'm Michael Bull. This is the Commercial Real Estate Show. We're invited to check out the Commercial Real Estate Show on YouTube. That's right, you'll find a great selection of videos like Reese on Real Estate and the Fed's view of commercial real estate. You're invited to subscribe so you don't miss a show of special interest to you. Just visit YouTube and search for the channel Commercial Real Estate Show. Today we're discussing the hospitality industry. My guests are David Marvin with Legacy Property Group and Mark Woodworth with PKF Research. And Mark, I'd like to ask you about transaction activity and cap rates. Has it really heated up? What do you see?
Transaction levels are up. We think they'll be even greater in 2014. Cap rates overall are holding steady, which you may find a little bit surprising because you would normally expect there to be some kind of downward pressure on that as transaction activity picks up. The reason we say that, if you think about really the three drivers of cap rate change, and you have underlying interest rates, income growth, and volatility. In reverse order, volatility, i.e. new construction in our business, is not a threat in the vast majority of markets. Hotel profits, as we talked about earlier, are growing at a very attractive clip, and I think the marketplace believes with a lot of comfort that that's going to persist for at least another couple of years, perhaps more. And the third is interest rates. So now, Michael, I'll ask you, where are interest rates going?
They're going to rise.
They're going to rise. Well, I think, and most people comfortably believe they are. In fact, they've gone up 120, 130 basis points over the past year. So the question really becomes how much.
Yeah.
Our own, and we rely on Moody's Analytics and their economic outlook, but our own cap rate forecasts do see hotel cap rates pretty much staying flat for another year or two, even though treasuries are going to be lifting another 100 plus basis points, we think, over the next 6 quarters. At least Moody's does, and so forth. But we think that the profit growth is going to be enough to overcome the lift in the underlying treasury rate, such that cap rates overall stay relatively flat. Most importantly, if we look at the risk premium that the market assigns to hotels, which reached its narrowest point back in the third quarter of 07. Remember the good days back then before the bottom fell out. We think that important point in the cycle is going to come back probably in the third quarter of 2016. So this notion that I think investors today have a lot of comfort that we got a nice 2-3 year run, and so it's a good time to be putting capital into hotels.
So it's a good time to buy a hotel?
I think it's a great time to buy a hotel.
And can you give us some sample cap rates that you're seeing on some sample properties?
Boy, it's a real hard question to answer because it
depends on the property.
It depends. My favorite answer is it depends, right? So it really does depend on the property, and is it a turnaround situation, or are you buying into a stable income stream, and so forth. But with the vast majority of property types, it's certainly a single-digit number.
Yeah.
And sometimes you see that number get down into the 5-6 range, depending upon the asset involved.
Okay, so is it time to build a hotel?
I think you should ask David Marvin that question.
David, you're building a full-service hotel, right?
Well, we just opened a full-service Embassy Suites in Tennessee, and are currently building a full-service Hyatt in Atlanta, Georgia. So Is it a good time? You know, I think it's a good time. It's been a good time to get going with projects like that, given the cycle. The challenge, of course, was to make sense of a full-service hotel, given their reputation for not returning as high a margin as limited service, and the lack of available capital. But in our two cases, we found institutional or high net worth individuals who had a very forward look and agreed that this was a terrific time to invest. So we're delivered in one case in 2013 and in another case 2014. And I think the investor is going to do extremely well. We're also planning two more developments. One a limited service hotel and another is a full service hotel addition, and we're optimistic about that. But in each case, it's a very special circumstance. It's very palpable, latent demand that we think we'll be able to tap with those projects. High barriers to entry, so that if we're successful, competition can't come on our heels, and accretive to other investments in the area.
I was going to say, Michael, I think David, not to make you feel good necessarily, but David's ahead of the curve, and we were fortunate. We work all around the country with developers trying to get deals done. And I would say we're still very much in that part of the cycle where what David just described is more of the exception than the rule in most markets. What we are seeing an awful lot of more public-private deals, where you have municipal entities that are recognizing that for the greater good, it would be nice to have a full-service hotel, but yet the economics don't work. So they're stepping up to the plate, typically by taking an ownership stake in either the entire project or at least a financing stake, or just the meetings component itself, which, as David knows, that tends to be some of the more expensive components of a full-service development. So we're seeing lots of public-private deals being explored around the country right now.
Okay. And what are some aspects that an investor or builder developer should look at for the right location? Are there certain key things that maybe the listener might not think about?
You know, I think it's all about demand generators and making sure that you can fill that hotel and that there's a healthy imbalance between existing supply and that demand that you've identified, that there's a need. And it's not a future need that you hope materializes unless it's a very special circumstance. It's a very tangible need that you can understand and that you in turn can explain to lenders and investors.
And make it come true.
Make it come true.
Right, it's interesting because you see these boutique hotels and all these different types of hotels, so you think, you know, on the outside looking in, you might think, well, it looks like they're having problems. Well, maybe a boutique hotel or some other type of hotel can do well, right? And that's what you guys are figuring out when you're developing these hotels, right?
Yeah, maybe we can expand on that in the next segment, because I do have some thoughts I want to add to what David said.
All right, we'll be right back. I'm Michael Bull. This is the Commercial Real Estate Show.
The Commercial Real Estate Show is brought to you in part by France Media. France Media provides exposure to the world of commercial real estate. Visit francemediainc.com or call 404-832-8262.
Welcome back. I'm Michael Bull, and this is the Commercial Real Estate Show. Well, we're excited to announce a new service on the show. It's called Ask Michael Bull. Every business day, I answer a listener's question on video. You can check it out at the Twitter account, Ask Michael Bull, or on our YouTube channel, Commercial Real Estate Show. Well, today we're discussing the hospitality industry. My guests are David Marvin and Mark Woodworth. And Mark, we talked about boutique hotels before the break. How do they fit in the mix of demand?
That's one of the fastest growing categories in our industry, Michael, and it's really demonstrated a critical point when underwriting a new project in any market. And that is conceptually, I'm going to get my business from two general sources. Demand that's new to that particular market comes through organic growth, or I'm going to take it away from someone else's, food off of someone else's plate. So understanding how much of your business is going to likely to come from each category, and how do I have to brand or amenitize my hotel to optimize that is critical to a successful deal.
Yeah, that makes sense. Well, Dave, what makes owning and investing in hotels different than other real estate assets?
Well, I think the age-old answer is it's half operating business, half real estate. And with regard to the operating business, there's some components that include brand affiliation, which is often the case, not the case with boutiques. And then just the arms and legs and managing the guests as they come. I have observed that our hotel staff sees the best of humanity and the worst of humanity and has to do a great job managing both. So it's a very active business. It's not a passive real estate.
Yeah, and it's interesting based on the other asset classes that your income can change daily. You know, you don't have long leases, so your markets can move pretty quickly at times, especially on individual assets, right?
Well, you know, that's the good news and the bad news. So, you know, I think the hotel industry has rebounded fairly nicely, and I think that there's landlords in the office world that have written long-term leases, maybe at a low point in the market, that are going to have to live with those rates for a long time. So it is more volatile, but the hotel industry can adjust certain cost factors such as labor and staffing to comport with what the market is in the moment. So,
what are some tips to help operations in a hotel? What increases the income and the occupancy at a hotel on its own merits?
Well, I would say do everything that you can reasonably do to build customer loyalty and satisfaction, because the customer who comes back is a customer that is, the acquisition cost for the return is very low, and that often is a customer that spends a lot of money. So a great way to build business, to state the obvious, is to do what you can do to make the customers happy. That's product, that's the appointments in the room, that's the amenities and features and other attributes of the real estate, but first and foremost, it's the customer experience in terms of dealing with your staff. And so I think preaching the right culture to your management organization, one of devotion to customer satisfaction, is the key.
Yeah, I think that's real key. As a customer myself, I know it makes a big difference. Mark, you got a closing quick tip for our listeners?
Usually, back when I was in operations, I would instruct people if they saw someone like you coming, to be careful, right?
Be careful.
No, you'd be in the VIP category. No, I just really underscore what David just said. And I think in a very simplistic way, it's not unique to hotels, but fundamentally, do for your customers, your clients, what you tell them. You're going to do what they expect to have done, and you're going to be well ahead of the game. And it's a service business, so make sure the service is what it needs to be.
Well said, David. Mark, thanks for joining us today. For more information from David Marvin with Legacy Properties, visit legacyproperty.com, and for Mark, PKF Research, visit pkfc.com. Well, can you join us next week? I hope so. We'll be talking about new ways to raise money and invest in commercial real estate through crowdfunding. I'm Michael Bull. Thanks for joining us today. Be sure that you always lead, learn, and laugh, and join us for the Commercial Real Estate Show.
The Commercial Real Estate Show is brought to you by Atlanta Office Liquidators, new and used furniture liquidators, France Media, publications and conferences, and Bull Realty Commercial Brokerage, a great place to do business. For more information on these companies or to access additional podcasts, videos, or blogs, visit commercialrealestateshow.com.